Hey, I'm Angel, founder of AI Flow app, where we help founders turn operational chaos into clean, scalable systems using AI. AI Flow is my podcast where I talk to early stage leaders about the real behind the scenes, what's working, what's breaking, and how they're using tech to move faster with clarity. Let's get into it. I'm doing well. How are you?
I'm doing very well. Where are you calling in from?
I'm calling from New York. How about you?
Oh, awesome. I'm up in Toronto right now because I'm at Consensus, which is a big blockchain show.
Okay. That's super
Yeah.
cool. Love
Yeah.
Toronto. I'm actually
Yeah. Yeah.
from like close to Toronto. Not that close. I'm from Michigan, but a few hours
Yeah.
out.
Toronto's changed a lot. Canada, I'm originally Canadian and Canada has changed a lot in the last 20 years. Yeah.
Yeah, so I appreciate you joining for this podcast today.
I
I
appreciate
saw
it.
that you were working with Elevatus recently.
Yes.
Yeah,
Elevatus is a registered
Elevatus.
investment. Yeah, is a registered investment advisory firm that
Yeah.
we're working with, and that's part of our go-to market strategy. Because what we're doing as a company is we're helping homeowners access their equity debt free.
Hmm.
And traditionally, if you want to access equity in your home, you have to either sell it outright and move, which is, obviously a big headache, a big hassle, very, very expensive. You end up having to pay commissions to brokers, et cetera. And it's an upsetting moment in your life, right? You got to sell your
Yeah.
home, or you go to the bank and go back into debt, or add to your debt. And that's not an option for a lot of people. They don't want to go back into debt. They don't want to have more debt. I mean, consumer debt is already at an all-time high of about $1.2 trillion, and that's high interest credit card debt. So I don't think consumers want to add more burden to their monthly payments. So there has to be an alternative in the marketplace, and that's what we're providing.
Yeah.
So one of the things we uncovered during discovery, talking to people, this is becoming a big problem for registered investment advisors. Homeowners raid their investment portfolios for unforeseen expenses. So, college tuition for the kids. Let's go rate the investment portfolio. Oh, un, 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 unexpected medical expenses. Oh, let's go rate our investment portfolio.
Yeah.
Or what we're finding, divorce. People get divorced and they want to raid their investment portfolio because they want to keep the house. They want to
Yeah.
buy out their partner out of the house. They don't want to sell the house. And it causes all sorts of problems for registered investment advisors because when you pull out or extract capital, it's not just the capital, you're extracting out the potential earnings of that capital down the road, and it sets investment strategies back significantly. So by giving this as an option to registered investment advisors and saying, hey, we can help you. We have a home equity operating system that you can tap into, and we can help your client tap into their home equity and solve this problem. And in many cases, they can leverage this tool to increase assets under management because they can sit down with their client and say, "You're really well over indexed on your home. We could take some of that money out and put it over here and be able to drive greater return on investment." Because when that money sits there, it's stagnant. It may
Mm.
appreciate as home price appreciation, but it's not at work, right? It's not
Yeah.
at work the way it is traditionally in the capital markets. Yeah, so that's what we're doing with Elevatus, and hopefully we're going to be adding more soon. We've got a couple more lined up and making some more announcements about stuff like that.
That's super cool.
Yeah, it
So,
is.
yeah, it
I say
is. It
so
really is.
myself. Yeah, yeah, and we're
Yeah.
also going to work with credit unions, banks, because credit unions and banks turn down clients all the time because their credit score is no good, right?
Yeah.
They have this house, but the credit score is no good, or they can't produce a W-2 because they're an independent contractor, or they have their small business, and they don't have a regular income, so they don't have a W-2, so they can't get a loan because
Oh,
banks
wow.
underwrite you. We underwrite the asset. We're interested in just that asset. If you have bad credit, that's not our concern. We're
Yeah.
underwriting that asset. It's about an investment in that asset. And that to us is what's important. So small credit unions, small banks, they turn down clients all the time and potentially lose them as a client. So you've got a client that comes in, he's small to medium sized business. She wants to get a loan against that business. The bank says no. She's like, okay, I'm pulling my business account out. I'm pulling my personal account out. I'll go somewhere else, find someone who's a little more business friendly. They can lose a client, but this way they could say to the client, you don't qualify for our credit product, but we have this home equity product that you can qualify for. You've got a $1 million home. You can tap into $200,000 or $300,000 of that credit, and suddenly you have cash for your business. So from that perspective too, it solves that problem because there's 33 million small to medium sized businesses in the United States. That's a significant amount of people. And we've had discussions with large registered investment advisors too, and they have a disproportionate disproportionate number, given their size, of entrepreneurs within their ecosystem who just can't get credit, even though they've got assets. So
Wow. Sounds like really important work. So,
we kind of feel it is
yeah.
because there's got to be a healthy ecosystem always has options, right? And
Yeah.
I say 100 years, but it's been longer. People have only had two ways to access the equity in their home. They sell it or they go into debt. And there's got to be another option, because if you're a company, you've always had multiple options to raise capital. You can go to the markets and sell equity. You can go to the
Mhm.
debt markets and get debt. With homeowners, that's never been the case. It's always been debt, debt, debt. And we've been trained
Yeah.
on it too, right? What do
Yeah.
you do? Well, I get a credit card, I go into debt. I get a home loan, I go into debt. I buy a car, I go into debt. Everything's about debt. And it doesn't always have to be about debt. It can be about the actual value of the asset. And right
Yeah.
now, there's just about $17 trillion, and that's $1 trillion of tappable home equity in the United States. And when you look at the demographics right now, you have a demographic of 55 and plus right now
Mhm.
represent 100 million people in the United States. In 10 years, it's going to be 120 million people. So
Wow.
as people are reaching the age of retirement, they want to age in place. Their options become more limited because they're not employed anymore in terms of the type of credit they can get. The vast majority have the wealth in their home. They don't have investment portfolios like a lot of people think, right? It's a very
Mhm.
small majority of people make their wealth off equities and stocks and whatnot. Most people have the wealth in their home. So if you're sitting on a home worth a million, million and a half, you've reached retirement age, you've got a pension, you may need to bridge that gap between pension and your living expenses. You don't want to go get a reverse mortgage, because those
Yeah.
are just brutal and highly inequitable and have massive upfront fees. You want to get something that can let you tap your home equity, have access to that cash, no monthly payments, and now you're bridging the gap between income and the shortfall that you have. So that's
Yeah.
another big significant issue that's taking place.
Yeah. So with this growth in that market, like, how are you guys adapting and like what are you doing to, stay ahead?
Stay ahead. We feel we're
I I
at.
I, I do see that, yeah,
Yeah.
but
Um,
just like
I
curious, like what you're doing to be ahead.
Yeah, I mean, it's really about deploying technology at the right point in time and vetting that technology before you implement it. We're not the type of company that wants to run off and go, "Hey, let's just implement this technology because it sounds cool." Chasing this shiny object is not going to help you or help your clients. So when we make a decision about deploying specific technologies, it's been really well researched, it's been tested, vetted.
Hmm.
We had vetted this platform and concepts on other blockchain solutions. We evolved, we adapted, and now we've settled on our blockchain partner is Provenance. And for us, after going through this whole process, this whole learning curve, they're without question the right choice for us, because of the way they've structured and built out their blockchain solution is oriented towards financial services, which is ultimately what we are. And they
Yeah.
get the whole value chain. They understand the role of institutional money. They understand the consumer end of the spectrum. They've structured the platform from a permissionless and permission basis. So it's a really dynamic, agile platform that works really well for us from our perspective, because we tap into that institutional end of the equation for forward flow capital seamlessly, and then also be able to deal directly with homeowners and have them part of that ecosystem as well.
Okay. Are there any like other major shifts that you're seeing in your industry right now?
But yeah, in general,
Yeah.
blockchain is being deployed now.
Okay.
It's accepted as a technology that's going to evolve and compress. And by compress, I mean flatten the whole financial services space,
Yeah.
and make it more fluid and more global. Right now, it's a chaotic mess. If you look at the sort of TradFi backbone of financial services, it's piecemeal. It's this over here, that over there, this over here. It takes 6 days to transfer money from Canada to the United States, whereas
Yeah.
on blockchain, it's instantaneous, and that's costly, right? The flow of capital, the free flow of capital, is extremely important, and blockchain enables that. So we're starting to see that getting implemented more and more and more, in the recognition that this is a viable technology. And I'm hoping that there's now a split and an understanding that cryptocurrencies, memes don't equal blockchain, right? People
Yeah.
people look at blockchain and they automatically like they always gloss over and they go, oh yeah, it's cryptocurrency, that's fraud and scams and all that stuff. It's not. The underlying technology is extremely sound. The
Yeah.
whole concept behind blockchain is extremely sound. How people apply it, well, I mean, that's people can do anything they want with any technology and turn it into something nefarious.
Yeah.
But technology itself is very, very significant and has the opportunity to fundamentally shift, sort of unravel the technical bureaucracy that exists in financial services and make it work better for everyone. And in many cases, make it more accessible to everyone. I mean, when you think about it technically, there'd be no reason down the road, whether there'd be no reason down the road that someone in Africa or Australia or Southeast Asia could not be buying home equity investments off their
Yeah.
phone, right? They couldn't do it right now, but there is no reason down the road that that can't happen. And that makes things much more transparent, much more global, much more free flowing, and much more accessible. And I think that's something that we're going to see blockchain implement. And the other aspect to this is AI, right?
Yeah.
Certainly can't ignore the 800-pound gorilla in the room. AI is going to have a significant impact on financial service too, because it automates and streamlines.
Hmm.
It does the work of 1,000 people type thing. It's going to have a significant impact because parts of our business are going to be ameliorated by the fact that we're going to be able to implement AI into the whole underwriting process. We're going to be able to provide AI tools for data analysis. So there's a lot of significant elements to this that are going to have an impact on financial services as well.
Yeah, I feel like AI is definitely very important. It's actually
Yeah.
something that I'm involved in as well.
Yeah.
But curious,
There's a
like what? Yeah,
yeah. There's a good side and a bad side to it. I
yeah,
mean, you
definitely,
know,
definitely.
I get worried that we're sacrificing, I'll use a safety for progress, and it's sort of
Yeah,
unbridled growth without some sort of construct in there. Like, okay, if we're going to do this, let's make sure we do it properly. I find the competitiveness, which is generally good in a capitalistic economy, is sort of running to a course where it's like, okay, we're at any cost, we're going to become the best AI company in the world. And I'm like, okay, but there's a risk to that, right?
yeah,
It can get weaponized, and that's something that does concern me because, got the future of the world at stake here. So it's a technology that it's the most significant technology development without question in the last since man started writing on walls. So
yeah.
we've
Very
got
true.
to do it properly. So.
Yeah. Is there any like AI systems that you've implemented right now, or that you're planning on implement in your systems internally?
Yeah, as I mentioned, it's going to get implemented into the whole underwriting process,
Yeah.
implement the smart contracts. I've always joked smart contracts were never really that smart. Now they can be smart because you can implement AI into a smart contract and actually have it executing on multiple levels based on different scenarios.
Mhm.
And then the whole area of automation from a customer service perspective to try and make that user flow far more seamless and faster for
Yeah.
homeowners and others using our platform and be able to get them through that process quicker is going to be definitely ameliorated by AI. Like customer success and customer service are going to just benefit enormously from that technology without people feeling like they're dealing with a chatbot. I think that
Yeah.
was always the early iterations of chatbots were like, okay, this is driving me crazy. Just get me
Yeah.
a being. You want people to get answers, but still feel like they're being serviced properly.
Okay. Are there any like challenges around that you're seeing right now, or maybe
I mean,
like
none so far.
other
Yeah,
other operational challenges that you're seeing?
none so far from that perspective.
That's good.
The advancements have been pretty significant on that end of the spectrum.
Yeah.
Deploying it into some more critical operational areas, that's where we're obviously cautious, right? You want to make sure
Yeah.
you're implementing technology in at the right point at the right time. I wouldn't feel confident saying, yeah, we put AI into this in this part of the business without some human oversight.
Mhm.
Even in the execution of a smart contract, ultimately there's human oversight into that prospect. You don't want a smart contract releasing funds inadvertently based on something without having a human look at it and say, yeah, okay, we're okay with that. So you do have those sort of safeguards in place
Hmm.
in order to make sure that you're not doing something that could cause harm to your client or harm to the business. So still have to have those human safeguards. We're not there 100% yet. We're all sitting on the beach and AI is running everything for us. Although I don't know if it would be good either, but
Yeah.
yeah,
No, I feel that. I feel that. I
yeah,
feel like you definitely need to have checks for that.
yeah. It's a tool. It may at one point not think it's a tool, so
Yeah.
that's what we gotta be careful about.
Yeah. That's true. Is there like what's the biggest operational challenge that you're seeing right now internally then? Seems like AI is working well for
Um, well, I mean, we're still at the very early stages of AI. From an operational challenge, it's a good question. I mean, it's scaling right now.
yeah.
That is the probably the biggest operational challenge. Making sure you have the right people in place is an operational challenge because you still need good people. You may need less people, but you still
Hmm.
need really good people. Um, so I mean, those are really the areas where I see the most significant challenges right now. It's not so much the technology. Most of the technologies we're using and implementing are mature and well vetted technologies. I wouldn't jump into an L1 that hadn't been vetted and been
Yeah.
used and exploited by the right companies and determined that it's an effective solution. So we've been very, not overly cautious, but very pragmatic in our approach to implementing technology. So from that perspective, we haven't had any challenges in that area.
Oh, that sounds great. Is there any metrics that you're focused on improving right now with that
Well,
technology or just in general?
yeah, the biggest metric you want to focus on, in our space at least, is so if someone comes on board into the platform, how quickly they can onboard themselves. So they have to go through a process because they have to go through KYC, AML. We have to make sure all those regulatory issues are checked off, right?
Hmm.
They have to upload some personal information to do that and get through that process. And then once that's done, they have to upload property details about the home, where it is, address, all that stuff. There's an initial valuation done, an initial screening done. And then if they pass what we call our buy box, then they move into the next step, which is we're going to have an inspector go to your home. It's not an owner's process, but they go in, they have a checklist of things, they take photographs, and then all that data is brought on chain as quickly as possible. So the metric there is how can you compress that time frame, right? How can you make it as efficient as possible? What technologies can be deployed? Then the next step is how fast can we get them the money, right?
Yeah.
Can we get them the money in 45 days, 30 days, 10 days, 5 days, instantaneously, right? And that is the goal to do that. Now, to do that, you have to have a flow of capital over here with a predetermined buy box with those investors, right? That say, hey, when those buy box criteria are met, that home goes into that HEI goes into that pool that they're investing in, and then the funds are released. So how fast can you compress that down? Can you compress it down to instantaneous? That would be like phenomenal. One of the fastest companies right now out there providing HELOCs is a company called Figure. Figure uses the same blockchain we use. And we've had conversations with people where they've gone out and talked to more traditional HELOC providers, and the process was extremely onerous. It's going to be like 45 days before they could even think of getting the money. And then they went to Figure, and Figure was able to provide from start to end cash in 5 days, which is
Oh,
fast.
wow. That is fast.
So that debt solution can do it. There's
Hmm.
no reason why we can't do it with an equity solution. And we're sort of the equity side of the coin to Figure's debt side of the coin. And I think for the markets to thrive, you need both because
Yeah.
debt still works for some people. And then for other people, they need this option of equity. So I think any solid market has got both sides. It brings balance to the market. And the market needs both. And right now it's lacking the equity side.
Yeah. So you said that it was in the early stages of integration, right, for AI on the onboarding side. Like, what could you delve more into that maybe? Like, see
There's
where
not
the
much.
challenges are still, or like
Yeah, I
maybe
mean,
what's going well.
if you're implementing on a customer success side, if you're
Yeah.
implementing AI to streamline that flow, the bumps in the road are going to be when it messes up, right? AI is still not perfect. So there's going to be those outlier interactions where you have to have an exit for the user. If they're just stumbling into a problem with the AI, where they're not getting a resolution, you have to have that off ramp where they can talk to a human being at the end of the day.
Yeah.
And you have to provide that option because it's still not perfect. So it's in that area
Mhm.
on a customer success side that you're going to see those bumps inevitably because you're going to have someone who ends up having a problem that is just unforeseen. The other aspect of this, there's still I'll call it an analog. There's still a human orientated process to those early stages. We have to send a person out to do the inspection. That is without question still going to be done by humans.
Yeah.
Until there's a technology, and there are some technologies, some really cool technologies with AI and drones, so they can fly a drone over a home and do a very thorough inspection of many aspects of the home, like
Oh
roof,
wow.
foundation. Yeah, they use really sophisticated imaging technology, and they're able to tell where there's potential problems in the home, from environmental to structural, which is fascinating. And the home is technically in a public domain, so you can fly that drone over the home and do that
Yeah.
without being invasive from a privacy perspective. There's also some really cool imaging satellite technology that's out there that can also do that stuff. So and they deploy AI to analyze the imaging and stuff like that. So that's really cool. We're not implementing that stuff yet. There's also some technology that we've looked at where someone can actually walk around their home with their smartphone and take pictures of certain things based
Mhm.
on the parameters that we've asked them. And then it can do an analysis
Yeah.
of the home from that perspective. And that also makes sense. And that's cool because then the homeowner is in control. Someone doesn't have to come into their home. They can go around the home, take
Mhm.
the pictures they're supposed to take. The AI model analyzes the pictures and pumps out a report on the other end. And then you've got something that's very, very thorough in terms of its analysis. And it's less invasive for the homeowner. So there's things like that. And then you got to make a determination, okay, what data goes on chain, what data doesn't go on chain. Do we put just the analysis on chain? Do we put the pictures on chain? Because those are pictures off someone's phone. So those are the things you'd have to grapple with in terms of deploying that technology. But right
Mhm.
now, that process for us is still send an inspector to the home. We're not quite there yet of having that sort of AI oriented technology, but that would be something that we would want to implement down the road because
Yeah.
it's about making the process more seamless, less invasive. When you're getting someone coming into the home, at the book a time, they have to come there. If someone can do it at their own convenience with their home phone, or we can send a drone over to take photographs and do the imaging to make that determination,
Yeah.
that makes the process less invasive, more seamless for the homeowner, and easier, and can compress timeframes because you don't need to wait for the homeowner to be there. You can just have them do it, or you end up sending a drone over the property to do that sort of analysis of the property.
Super cool. That
Yeah,
makes a lot of sense. Yeah. Is there
it
like,
does.
is this, I guess, question is if you could like wave a magic wand and have something fixed tomorrow, like what would it be? Would it be this? Like anything else?
Wait for magic wand.
Yeah,
I mean,
just like
yeah. I mean, there's when you're launching a business that's you know new. Um, it's hard to say, wave a magic wand. I think you have to have those problems. There's no easy solution to the obstacles you overcome. And I think they should be difficult because you got to put a lot of thought into them. Um, and so there's nothing per se that I'd just like to have disappear because it's there for a reason, right? We need to have that obstacle in order to think it through and come up with a better solution for it. That's one
yeah.
of the risks you have with AI, right? AI is very quick to say that's the solution.
Yep.
If you use it to write an email, or if you use it to write it, it's very quick to say that's the way it should be. Unless your prompt is structured in such a way that it produces phenomenal results, and there's so many ways to draft prompts and stuff like that. But you do have to be careful because humans tend to go, okay, that's great, I'll do that. That may not be the right solution, right?
Yeah. Very
Uh,
true.
so you've got to be careful about that too when you're deploying AI, or when you're looking at situations and saying, you know, wave a magic wand. No, maybe you shouldn't. It should be difficult, and let's figure it out. Let's put our brains together and figure it out. So I hope that answers your question. That's not quite the answer I think you were
Not
looking
not quite
for.
the answer, but if there, like, hypothetically, if there was something they could fix by tomorrow, like, what would it be?
Well, I mean, just the complexity of evolving a business model. If you could wave a magic wand and have all the answers in front of you and say those are definitively the right answers, that would be great.
Yeah.
And another issue too is, you're dealing with people, right? So communication issues. How do you communicate the value proposition of your business? How do you understand what that person's thinking? What is that person's mindset, and what's that person's investment thesis?
Yeah.
Um, Communication is always a challenge, right? So it'd be great if you could wave a magic wand and everyone would be on the same level and they would understand each other.
Yeah.
But that's not the case. So human interaction and that's extremely complex. But it's part of it. Would it be great to wave a magic wand and have all those complexities disappear? Yeah, it would make life
Yeah.
a lot simpler, but you may again not end up in the best situation. Who knows? So
That's fair. That's fair. Is there anywhere in particular that you're like targeting in the next 12 to 6 months or
yeah,
6 to 12 months?
yeah. Our market is the U.S.
Yeah.
And eventually, what we'd like to do is take this concept global. So in the U.S., there's specific states we're focused on. A state like Texas, because of the homestead laws and rules that are in place, makes it very difficult to launch this type of product. So
Yeah.
Texas, hopefully, we'll get around those issues, but California, Washington State, Oregon, New Mexico, Arizona, those states are our first focus, with California being the primary focus. And then eventually we'll move eastward into Florida, Alabama, the Northeast and whatnot. So the goal is to be in all states with the exception of Texas for now. And
Yeah.
then take this into Canada, take it into Mexico, Central and South America where it's applicable, Europe, parts of
Yeah.
Southeast Asia, where there are significant opportunities as well.
Yeah. It would be different in every country, right? Like, how would you
There are
scale? Like, how do you
different
plan on scaling that?
rules and laws, and
Yeah.
the laws the regulatory issues end up being integrated into sort of like, let's say we're in Japan's version of our home equity operating system. So whatever rules and regulations you have to abide by in that specific area, that's what you would build out the platform. So that back end part of the platform would be customized for that specific geography or that specific market that you're moving into. Just like it would for language. I mean, if you're obviously in one of those geographies, you have to reflect the culture and the language of that particular
Yeah.
geography. So you'd adapt the platform for that as well. But the underlying technology is still applicable. So you're making changes to elements of the platform, but not the underlying sort of nuts and bolts of the platform would remain the same.
Yeah. And how fast are you planning on expanding outward? Like,
Oh,
like
as
how
fast
fast would you think you
as
would
fast.
get to in like the next 12 months?
Well, we're not going to be global in the next 12 months.
Yeah.
Yeah, no, I mean the plan is to be very successful in
Yeah.
the US in the next 7 years. Like just be super hyper
Yeah.
successful, hyper focused on that market. And then once we're successful in that market and we're growing the business, we've overcome a lot of the, hurdles that were unforeseen and the business is running like a well-oiled machine, then you can start going into other markets and looking at other
Yeah.
opportunities. And they would be, markets where things are similar. So a logical next market would be Canada. Then a logical next market would be maybe the UK, and move and grow progressively like that. But yeah, next 12 months is hyper focused California market, states around California, and then grow, 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 grow from there. There's no reason why you can't just open up multiple states all at once. We could really perfect the model in California and say, okay, every state's open, with the exception of Texas, where
Yeah.
unfortunately it's just a bit of a problem to launch this product in Texas.
Yeah, that's totally fair. Is
Yeah,
is California like where you're starting off in, or like what
yeah.
states are you already operating in?
California is the first market we're focusing on. There's no reason why we couldn't take in properties from other
Yeah,
states at this point in time. But we're just
yeah.
focusing on California because we wanna get the platform working well, get everything, all the kinks worked out, and focus on one area also from a regulatory perspective or any local regulatory issues you have to deal with. Do we need a broker's license in the state of California? Alabama, you may not need a broker's license. Some states have very specific laws. California is also a good market because all the titling offices are digital. They've been very progressive in that regard, so it streamlines the process as well. There's a great concentration of assets in California. From an economic perspective, California is larger than Canada as an economic GDP.
Oh, wow. I didn't know
Yeah,
that.
yeah, and so it's a significant geography from that perspective, economically very
Mhm.
viable, great real estate. So yeah, it's a good geography to focus on first.
Yeah. Are there any challenges that you've seen in California in particular?
The only thing that worries me, and this you're seeing this everywhere, I don't think it's just California, is the insurance companies are canceling homeowners insurance because they consider the area high risk. So they'll say, well, there's a high risk of wildfires, so we're canceling your insurance. Now, it's not a problem if a person has no mortgage on the house. I mean, it's a concern because if something happens to their house, they're not insured. But there's no bank involved, so there'll be no foreclosure. We won't buy equity in a home if there's no insurance. So the fact that the insurance companies are going out canceling insurance because they deem it high risk is problematic, not just for us, but for
Yeah.
banks, and for people, right? I
Mhm.
don't think insurance companies should be allowed to do that. They're in the risk business, and some areas are going to be super high risk,
Mhm.
and other areas are not going to be as high risk. And they need to balance that out, and they need to charge fair fees for the higher risk versus lower risk areas. But they certainly can't price people out of the market, and only the super, super rich can afford the insurance. And in many cases, I mean, you're aware of what happened in the Pacific Palisades in California and LA. That was a high end neighborhood. There
Yeah.
were a lot of rich people there
Mhm.
whose insurance had been canceled. They had no insurance. And now
Oh,
they had no
wow.
mortgage, so it wasn't the end of the world, but they had no insurance.
Yeah.
They can afford to rebuild their homes because they've got money, but that is not right. So
Yeah.
that is a problem I'm seeing, and you're seeing it in Florida because of
Mhm.
hurricanes and flooding, and you're seeing it in other states too, where they're deeming it too high risk. And I
Yeah.
think that that's a trend that just can't continue. There has to be mechanisms, and there has to be a way to provide insurance to people even in high risk areas. Um, and that I see as a problem. So it's not just California, it's Florida, it's any state that has the risk of hurricanes. So you've got to be mindful of that when you're going to any market. What are the insurance issues? Because we will not insure them if they don't have insurance. We will not provide them home equity if they don't have insurance.
So I really appreciate you jumping on this call today. Your
No,
insights
no.
were super helpful.
Thank you for your time. I look forward to seeing the
Yeah.
podcast.
Thank you so
Take
much for
care.
your time as well, Michael.
Bye bye.
Have a good one.